This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. K-State grain economist Dan O'Brien and the senior economist at the IGP Institute Guy Allen kick off today's show by discussing the grain market both domestically and internationally. In the first segment, they talk about the foreign exchange, wheat, and corn. Then the pair converse about grain sorghum, soybeans, cotton, and transportation in the second segment. Finishing the show is Chip Redmond, K-State meteorologist, as he says how the state continues to experience fire weather, but that could be changing for parts of the state with the next systems. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you.
As we're talking about the grain market right now, because the recent WASDE report has just come out, first wanting to talk about the foreign exchange.
The biggest mover I'd suggest today, or the last 2 days, has been the strength in the U.S. dollar. We've seen the dollar index rally back above 105.25. That's the strongest dollar value we've seen since mid-November 2023. And that probably had more today, I'd suggest today, with the downside in commodity prices than the WASDE report itself. And we'll sort of see that, I think, reflected in the WASDE to a point in the fact that exports have just really been struggling and continue to struggle. And across a number of the complex, USDA has actually reduced our export numbers. And look, the big move in the foreign exchange rate and the value of the U.S. dollar today was some of the U.S. financial news that came out in the last couple days.
But even with that, yes, it had an impact, but we're down a nickel on corn futures on the closes yesterday, a nickel for the May contract, a nickel in soybeans are basically 5.5 cents, both of them being down. And for hard red winter wheat down to 11.25. So, of course, in that supply-demand balance sheet, there's a little more growth in ending stocks than in some of the others, relatively speaking. So anyway, not a surprise, but we'll come back to these by commodity. But the soybean export number was reduced, so that was important very much. That had to do with pace to some degree, but the pace is affected, of course, Guy, by the foreign exchange rate, as you're talking about. The wheat export number unchanged, corn export number unchanged. So far, it's probably a bet more on what's happening in soybeans and more on the future in terms of where the impact might go.
And wanting to take a deeper dive into all of those commodities, and the first one to talk about is wheat.
Before we came on air, we were talking about the issues that are happening in the market with regard to crop conditions and acreage numbers that came out in that end of March planting prospects report, et cetera. Most of those are not in the April the 11th report. They will come to bear when we get into the May report. And with that, we'll start to look at, for the first time in WASDE reports, at what the 2024-25 marketing year will be. And of course, for corn, grain, sorghum, and soybeans, that won't start until September 1. However, it will start, that 24-25 marketing year will start June 1 for wheat. When you look at wheat on supply-demand balance sheet, some small changes. A little reduction in wheat imports, down about 5 million metric tons, down to 140. And probably came out of that stocks report, Guy, and at the end of last month was the 30 million bushel reduction in feed usage projected by the USDA. And that's kind of a big deal. I know, as Shelby and I have been watching the Garden City new crop bids for corn versus wheat, and they've been hovering at that low level. But with this report, basically the USDA is saying that we don't think wheat feeding is going to come in strong, at least not this year. It may still happen for next year, once we get to June 1, if we have crop damage from what's happening in Western Kansas right now, it might come to fruition. But as far as this marketing year goes, they look at the last two quarterly reports and haven't seen pace there to support that, and went with what they had. You did see at the end of the line, or at the bottom line for domestic usage, ending stocks being up 25 million bushels, went from stocks to use of 30.3, basically to 36.3 to 38.3, and prices down about 10 cents. And really the wheat market continues to languish. A lot of that has to do with what's happening internationally. And Guy, I'll throw that to you.
Yeah. Look, just before we move to international, I was just looking at the wheat by class. Hard red winter wheat ending stocks to use is just a hair under 50% compared to last year, just at 33 1/3. And that's a very, very sloppy hard red winter wheat balance sheet, particularly for Kansas. And it wouldn't surprise me to see a bit of wheat feeding come in there the first quarter of that wheat marketing year as we get to harvest in July, August, on that.
Hard red winter wheat exports last year were, the last marketing year, 224 million bushels. This year at 135 and has been dropping. So again, the Black Sea competition really for all these countries that are competing with that class of wheat still a big thing.
Yeah, and looking overseas internationally now, that at the Ukraine and Russia, first, look, the production number was unchanged for them, but they're still forecasting a record 52 million metric ton crop over there. The Ukraine was unchanged. Exports were increased by 1.5 million metric tons to 17. It's amazing their supply chain domestically and moving that grain to export channels has been quite resilient over the last 2 years. EU crop production is a hair 500,000 tons higher, but exports were lowered by 2 million metric tons. And the one that I watch pretty close is China imports unchanged at 11 million metric tons. That's compared to last year at 13.3.
With all of that, all the pessimism, all the negatives going on in wheat, we still have seen the ending stocks number and stocks to use drop from 19.65, the lowest since 2007, 2008, down to 19.53%. That's for for world minus China. So as long as we keep having large crops come out of the Black Sea, then we have what we have. What happens someday when that doesn't happen, or if they turn dry over there, then we'll have a dramatically different market, but we don't have it yet.
And wanting to also touch then on what corn is looking like.
Domestically, really strong usage. Again, low prices tend to encourage use and move supply demand curves in such a way that the quantities of use are more. And you saw an increase of 25 million bushels, again, driven by what they saw out of that last stocks report at the end of March. In feed residual usage, ethanol up 25 million as a projection. So domestic usage up 50 million bushels. Ending stocks down by the same amount, by 50. So we're still over 2 billion, but went from 2.17 down to 2.12 billion bushels. Stocks to use from 14.9 to 14.5. Price down about 5%. So really, I guess, a pretty positive story, really, in terms of domestic demand in the U.S. and some thoughts overseas, Guy.
Yeah, just looking internationally, not a lot of big changes in the wheat. Are seeing EU wheat imports reduced 1 million metric tons to 21. Mexico imports were up 500,000 tons, which that's good for the U.S. Southeast Asia was down about 500,000 to 17 and 3/4 million metric tons. So look, not a lot of changes here in the wheat situation, and as we're coming to the end of that marketing year, a lot of that's pretty well locked in.
Yeah. So the wheat and the corn, again, the corn.
I was talking about corn. So.
Yeah. Well, they're pretty similar. Yeah. A lot of similarities in these things, so it's easy to get them mixed up. The ending stocks figure did move lower. Again, world minus China, 106.4 million metric tons was 96.15 last year, and even though it moved lower, it's still markedly higher than last year. Large Brazilian crop, and until we get some other signal on that, actually. So we move into May, June, we'll start to pay attention to the size of the U.S. crop. Yes. Prospects for that, and that has potential to affect the market.
And as we round out our first segment of talking about wheat and corn, and we'll talk about sorghum and soybeans in the second segment or the second part of this, what would you like to tell Kansas farmers when it comes to wheat and corn and maybe what they should pay attention to?
Well, I'll take a stab at that first. I think that the world market is decidedly bearish in its narrative. We have a lot of things that could affect it. None of them have yet until they're not inclined to pay much attention to fears. They must be looking to actually see numbers come out of this. So, and I keep wondering how did we get that place? Well, I think they got conditioned last summer. The market drummed up fears of a drought in the Central Eastern Corn Belt. Turned out had record yields. So I guess we're kind of all Missourians now left to actually be shown short crops before the market would respond higher. Guy?
Look, I think the market's fairly comfortable with the underlying fundamentals. And again, I turn back to the macro issues and that foreign exchange rate and the dollar. I think that's going to have a bigger impact. That's where we're going to see some volatility in the next 3 or 4 months, particularly coming up to an election situation. And that's what I'd be watching a little closer. The thing that's frustrating me, I don't know if the news on that side is any brighter. Increasingly, I don't think we're going to see a cut in interest rates this year, even though some of the dialogue's that way. I just don't necessarily see it happening or the likelihood of it decreasing. And that's just not going to bode well for U.S. commodity prices. Again, the U.S. is a residual store of grain. As we increase those carryout numbers, that's going to hang a bit heavier on the U.S. situation.
We're cutting to a short break now on Agriculture Today. But when we come back, we'll once again be joined by Dan and Guy as we continue our conversation. You're tuned in to Agriculture Today, and we continue our Friday show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue our conversation on the domestic and international grain markets, picking up that conversation with grain sorghum.
No change in the domestic U.S. grain sorghum supply-demand balance sheet at all. Price is still $4.85 a bushel. And interesting that with the grain sorghum price of $4.85, now you've got the corn price at $4.70. So again, that domestic export sales of grain sorghum, much of it, almost all of it, going to China. Certainly a big issue there. And 245 million bushels of exports. Last year, 109 million. Year before that, 296. So we're kind of bouncing around. And actually, Shelby, as you and I have talked about in some previous weekly reports, you do see some weeks really low, then extremely high, moderately high, then dropping down again. It seems that we sell grain sorghum in bunches, but on average, doing pretty decent.
Look, the sorghum's the one bright spot, I think, in an otherwise pretty ho-hum commodity outlook. Also, from an international point of view, we're starting to see Southern Hemisphere programs in Australia and Argentina slow down a bit. I think they'll export about 1.5 million tons each. Most of that will have been moved or booked by now, so I would anticipate basis levels for U.S. sorghum to start to strengthen a bit in the next couple months going forward.
And then also wanting to talk about what we're seeing for soybean?
The soybean supply-demand balance sheet mainly had moderately negative news on it. But again, we saw a 5 million bushel decline in imports, which would be positive, really, for the U.S. supply and balance sheet. But then came down to crush being unchanged, 2.3 billion. Exports being dropped, 1.7 billion bushels from down 20 from the previous report. I'd seen a report within the last 2 weeks that we were, it was about a week and a half ago, we were about 75% harvested in Brazil. And that's probably 85% now at least. So you're bringing that crop out of the field down there. They'll have to logistically move it to the ports. And until that gets cleaned out of the system, then it's hard to see a lot of movement in U.S. soybean exports. There could still be surprises when we finally find out what the actual yields are. The USDA resolutely holds to a higher yield than in-country reporters are showing. So I guess we'll see who's right, they or the USDA. And little adjustments lower and little adjustments lower and residual. You add all that up, Ending stocks up about 30 million from 315 to 340 million. Stocks to use up to about 8.3%, was about 7.6, had been at 6.1, 6.4 2 years prior to that. So domestically, we are in at least a moderately higher relative ending stock situation than we were, and prices are reflecting it.
And just a question on that, Dan. Is some of that increase in ending stocks sort of a fading in the demand from the renewable diesel sector and the biofuels on the oil? I think that's a bit of what's driving that. Is we were pretty optimistic on that demand sector, and I think it's pretty well saturated, maybe even backing off a little bit.
It's quite possible, at least as we look at for soybean oil, the actual USDA numbers in the balance sheets still at 13 billion pounds as far as they're projecting.
Yes,
and that's up from 10.4 2 years ago, 12.5 last year, and 13. So it may be that you may be very right, but at least that in their byproduct balance sheets, they're not reflecting that yet.
Look, shifting the focus to the international side of things a bit. Argentina exports continue to be estimated about 4.6 million tons compared to 4.2 last year. We're watching Argentina, given the political discussion down there, to see if Millei's going to be able to continue to make financial reforms on that. Brazilian exports unchanged at 103 million tons compared to 95.5 last year. Paraguay was up slightly at 200,000 tons to 6.5, unchanged from last year. China continues to buy southern hemisphere Brazilian, Argentine, and Paraguay beans quite aggressively. USDA has their total soybean imports at 105 million metric tons, which would be a record. That's compared to I think about just right 100 last year. Their crush is estimated in China at 98 million metric tons. That's up 2 million metric tons from last year, and would be a record. So it's good to continue to see good demand coming out of China for soybeans. However, they have a preference at the moment, and that's a dollar value for Brazilian soybeans. They're more than $1 a bushel discount, or have been over the last couple of months, to U.S. soybeans. Again, I think that's driven predominantly by the foreign exchange rate.
The quiet third country down there is Paraguay, and they've had, you look at the last 3 years, they've had decent growth in production, a real recovery in exports. They were at 6.5. 2 years ago, they were dealing with drought situation, 2.27 million metric tons, but up to 6.5 million. And the one that'll finish on August 31st, 2023, they project next year up to 6.5. So again, we're looking at Paraguay holding in decently, and just one more element coming out of South America that's competing strongly against the United States.
Yeah, I think it's important to remember last year that Parana River was suffering from low water levels, significantly impacting exports from that upcountry Argentina river situation into Uruguay and Parana and southern Brazil on that. That seems to have reconciled itself a bit with a bit better access to the export markets for those countries this year.
And one crop we usually don't touch on, but want to just throw in there real quick, cotton.
Cotton prices still are lower. The U.S. 2 years ago, they were at 91.4 cents per pound for upland cotton. That'd be 21-22 marketing year, 84, 85 in 22-23 projected for this 23-24 marketing year at 76 cents, and that's down a penny from where we were. The world situation has actually tightened up a little bit, but the U.S. situation really has not changed much. Cotton domestic use, just so the export figure 2 years ago, 14.5 million 480 pound bales, 12.8 last year, 12.3 this year. So here you have the U.S. cotton situation sort of languishing, moving sideways to lower, but yet some positive things happening on the in terms of supply and demand balances on the international side. So interesting to watch that and how it all plays out this year for the U.S. cotton industry.
As we are talking about all these different things moving, Guy, important to mention what transportation is looking like around the world right now.
Yeah, I mentioned the Parana River situation, but looking at the Baltic Dry Freight Index, compared to where we were last month when we were having this conversation, we sort of peaked with the index at about 2,400 in the middle of March. At the moment, that's dropped by about 800 points by about a third, down to just below 1,600. I think that's reflective of a number of the situations resolving themselves both in the Red Sea and the Panama Canal, particularly for dry bulk freight. They've sort of worked that situation out. It's the Panama Canal situation continues to show relatively strong basis values in the PNW versus the Center Gulf, as that's where our demand is coming from China and Asia. If that'll may continue through the summer, we'll see how summer rainfall and weather impacts that Panama Canal situation. But I would continue to keep a close eye on that, particularly as when Asia demand comes in, it'll definitely strengthen those PNW Western grain belt basis values relative to Center Gulf and the river.
China's been in and out of positions on the markets. Some of that grain coming in and out of the Red Sea area, and I don't know that they're going to ship by any less than what they normally do, but they are very willing to hop in and out of positions when it seems to suit their advantage on the price side.
Are we seeing really any impact from what's happened in Baltimore?
Not in the grain side of things. I think it's having impact in other sectors, but there's not a lot of grain that comes out of Baltimore. It is an important container port to some extent, but most of the grain comes out of the Center Gulf or the lakes or the PNW. So from a ag commodity point of view, not so much.
Not a direct effect, but if it does slow down the U.S. economy tangibly and causes interest rates or other factors to change around, it could have an indirect effect. But as far as a direct effect, again, we're not sending a lot of ag goods in and out of that port.
So as we round out today's conversation, Dan, what reports are you excited to see in this next month?
Well, be interested in seeing the May, June, July WASDE reports that we won't have any USDA NAS crop production numbers until we actually get. We'll have farmer surveys in August. We'll have actual in the field measurements in September. So not a lot coming out of NAS on the production side. Other than we will have the acreage report coming out at the end of June. And that was a report that brought a lot of fireworks last year. We'll see what farmers have actually done, how they voted with their planters. And then for this year in terms of planting. And we'll have, of course, the stocks reports that'll be right in that too. And that'll give us an idea of how the especially corn, wheat usage has worked out on the feed side.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you very much.
Thank you, Shelby.
That was K-State grain economist Dan O'Brien, and he was joined by the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead. You're tuned in to Agriculture Today, and we finish our Friday show with a weather update. And as always, we're joined by K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, something we've talked quite a bit about on your weather updates, and need to mention once again is we've had quite a bit of fire weather.
Classic spring winds, but unfortunately we've had some really dry conditions over the last 2 weeks. 3 weeks, really, for the state of Kansas. And we combine those two with green up substantially slowed down. Leaves are taking a long time to come out now after initially a really rapid start. And so all those factors combined means that the weather and the fuels, or the grasses primarily, are lining up for a very potent environment for wildfires. We saw that over the weekend with that large fire northeast of Manhattan. There are several other fires in the area as well, and a lot of escape fires too, where people were losing control of their prescribed burns because it was just burning more aggressively than they expected. So we're kind of in a situation now where we really need rainfall, obviously, and we needed to move green up along, but also to suppress some of these fire concerns.
Are we going to see any of that moisture at the beginning of this coming week?
We're going to look at temperatures this weekend exceeding 20 degrees above normal, and that combined with the dry air mass means very low humidity and breezy winds, which means more fire weather. But then once we get into Monday, we do have another potent system similar to what we saw last weekend. The only difference is this one's going to be a little more mature, I guess is the right way to put it. trough is going to be tilted negatively, which means it should have a decent amount of moisture out ahead of the system. That should provide the playing field for a pretty stout dry line to move into western Kansas. Doesn't look like it'll push as far east as it did over the weekends. And we'll see thunderstorms develop to the east of that dry line and obviously fire weather conditions to the west of it. And those storms will have an ample environment of high moisture, high wind shear, and high instability, which would lead to potential for a severe weather outbreak on Monday. Right now, the highest confidence is south central Kansas to Oklahoma. But most of the state of Kansas, especially the central and eastern part of the state, are highlighted in already a severe weather probability for Monday. And that's pretty early considering we're still 4 or 5 days out in advance of the system. So severe weather seems likely. That'll hopefully bring some moisture with it. Now, unfortunately, the dynamics that are in place typically lead to more supercell type thunderstorms, which are much more isolated in precipitation and tend to have the bad stuff with the precipitation. And as they move further east, they'll likely merge and create a line, and that would bring more widespread moisture. But we're just looking at kind of the hit and miss of storms and not really widespread, long-duration rainfall like some lucky folks saw this week in the panhandles. We want that, and we're not going to likely get that with this storm Monday and into Tuesday. There does look to be another system that's going to come in Wednesday into Thursday next week. That will still have some lingering moisture around as we didn't have a really strong cold front after that first system. So that should hopefully have some more moisture to work with that will likely bring some more widespread moisture than what the first system sees. Unfortunately, we're still going to have a dry side to the storm, and then whoever doesn't get rain is likely to see continued fire weather concerns.
And Chip, as we have been on the warmer side of things, are we going to cool down in our future?
Yeah, so after that second system towards the end of next week, we are looking at colder air that's funneling in from the north that'll come southward with some northwest flow that'll stick around, I think, into early next weekend. And that'll likely set up for potential for some frost, freeze. We'll see. It's still a fairly long ways out there. And then, we're still in that window for our last freeze, and we could still potentially have that even into early May. Our average, just for central Kansas, average last freeze is about April 17th to the 24th. So we're still well within that window, and hopefully we don't see that happen because I know some of the wheat has progressed pretty far along. It could definitely be susceptible for freeze damage. But just a reminder for those itching when it's 90 degrees this weekend, it's not time to be planting vegetable crops. Corn, I understand people are already getting in the ground because, we can still see a freeze and you're going to have to cover them up a lot, at least the vegetables, and you're going to have to do a lot of proactive things. So just a reminder that we're still in early to mid-spring now. We're not quite into that the true growing season just yet.
That was K-State meteorologist Chip Redmond. That's all we have for you today on Agriculture Today, but we'll be back with more for you on Monday.